Brought to you by the EveryDollar app. Start budgeting for free today.
My wife and I are in a bit of a situation. We have, both of us have student debt, student loans. We have a credit card, and my dad has a Parent Plus loan. Now, the education system hasn't really told us what to do for a Parent Plus loan, but we have been educated now.
Mm-hmm.
So, basically, we're wondering if we can use a mortgage loan from buying my dad's property that he was going to give to us anyway, to pay off my wife's student loans in addition to the Parent Plus loan that is on his credit, plus, a credit card.
How much total debt do you have?
Total debt is around, including the credit card, would probably be 110.
110. That's both student loans and the credit card, but not including the Parent Plus loan, which is in your dad's name.
Including the Parent Plus loan plus the mortgage that is on the current place that I have right now, which is only about $23,000.
So you have a home right now?
No. So
this is your dad's place.
Yeah, I'm basically renting it from him. The mortgage is all still in his name, that I'm just paying it directly.
This feels all out of sorts. Okay, so the $23,000 left on the mortgage. You're living there. Yep. You're essentially paying rent, which covers the mortgage, but you're paying it directly to the mortgage company?
Yeah.
Through your bank account.
It's only $460 a month.
Okay.
You can't rent for that.
And you're saying your dad wants to now sell you the house. You would then take on a bigger mortgage in order to do so?
So, no, he's not going to get any profit from this.
Okay. So explain to me how the mortgage goes down.
He was already going to give it to me, the land of 5 acres and the house.
When he passes?
No, already.
That's a terrible idea.
So he was already going to give it to me, but now we have this debt that we need to consolidate.
Why do you need to consolidate it?
Because, the credit card interest is out the roof. Again, it's only $10,000, but the student loans, he makes double what I make. I make about 53. He makes 6 figures. So on the Parent Plus loan, we've agreed that I'd pay that back. That was an agreement we made in high school.
Okay.
When I was young and dumb.
Why not just keep the current situation? You have basically low rent. Use your income and your wife's income?
Okay.
How much total do you guys make?
She makes $45 a year, and I make $53.
Okay. So about $100,000 a year. How quickly can we pay off $110,000? That becomes the equation, right?
Yep. We're looking at that 7 years, but
No.
That's crazy. Your rent is $400 and it's going to take you 7 years to pay off $100,000?
Well, it's the student loans too. So that's what we would pay to pay them off, or move the money around. But in the long term of having an income-driven student loan repayment plan is stretching that out to 20, 30 years.
Well, yeah, income-driven repayment plan would do that to you, but you're not. If you're doing the debt snowball method that we teach and you're aggressively attacking the debt, not just making minimum payments, you would knock this thing out in probably closer to 3 or 4 years at this rate.
Okay.
And I would tell you, get your income up, get your expenses down, because making $100,000 with as low rent as you guys have, you should be able to throw a few $1,000s a month at this debt.
Okay.
So think about that. Could you throw $4,000 a month at the debt? If you really got tight?
Yeah.
Okay, well, think about the math on that. That's almost $50,000 a year. You said you have 110 total. This thing's done in a little over 2 years.
Correct.
So where did this 10-year plan come from? And what the scheming of dad's going to give me the house and I'm going to do a consolidation loan?
It feels like it's become too complex because it feels like they're trying to find a shortcut.
Yes.
Well, the shortcut right now is he's expecting the Parent Plus loan repayment to be like $500 a month. And on top of what we're already paying for our student loans, that's kind of a new thing of we're adding this $500 a month.
Yeah, but how does that I get what you're trying to say, but how does that give you the case to go, well, let's do this really convoluted thing and try to figure this out? He signed up for this. He's a grown man.
Yeah.
Okay, then. I guess I
It
want to
was
make
more
sure.
or less having the leverage of the land and putting it in our name.
But George, why is that a
seeing
terrible?
what we could help.
Here's what I want you to do. I want you to give George a minute or two here to explain why that's a really bad idea. He started down that path, and I just want you to hear him out.
Okay.
So I'm confused as to you're trying to move one debt to another debt and essentially say, hey, we're going to take on a mortgage instead of paying all of these debts off separately, right?
Yes, a single payment a month.
And that's going to solve the problems how?
Less stress, and we can't get taxes we can't put an expense or get tax breaks from the student loans or credit card interest.
So now you're doing this for a mortgage interest tax break?
It's an additional benefit.
Do you guys itemize your deductions when you file your taxes?
Yes, because I have a business as well.
The interest on this, it's not even going to be enough to warrant the tax break. I feel like everything you're doing is for a different reason than what you originally told me. I think we need one clear goal. And if you're calling this show, that goal should be to be completely debt-free.
Yep, that's the goal, and as fast as we can get that.
The other part is, if your dad gives you this house now, then it's going to move the step up in basis. So what did he buy the house for originally?
So it's a double wide, which means it has a title.
So it's going down in value every day.
Yes.
Don't do this.
Why are we doing it? This just
It
gets
makes
crazier
no
and
sense.
crazier.
And by the way, even if it did make sense, the amount of savings is going to be next to nothing. Am I right, George?
Yeah.
Quick calculation. So, Jeremy, this idea that I'm lowering stress by coming up with one payment is not true. The stress is from the total debt, and the money saved on this is not going to be worth it.
I would not take a mortgage out on something going down in value.
Not a double wide. Jeremy, that's like a country song.
This is bad news. You should be trying to get out of this situation, not stick yourself in it further and further and further. No more deals with dad, no more scheming, no more moving one debt to another. Just pay off your freaking debts. You signed the dotted line. You guys have a solid income. Get the income up, expenses down. Get out of this debt in 2 years. And that's the only solution I would be pursuing at this point.
Create your free every dollar budget today, the simplest way to budget for your life.